Yeah, Monday. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson, as we're going to do what we do each and every day, identifying potential breakouts and reversal trades from an educational perspective. Real quick reminder that Wednesday morning, 7 a.m. Central, we will be doing this live. So join us live Wednesday morning for our 7 a.m. Daily Market Commentary, as we will take apart the markets a little bit at a time. Let's go ahead and dive in. So the ES this morning, we're up about 8.5 points. We have pulled back a little off the high from last night. We were in the live trade room last night and talked about the fact that we basically have a standing breakout trade. Our breakout trade above the all-time high is kind of standing as an opportunity pretty much anytime we get up there. So I'm actually going to put a potential breakout above the Globex high. That if we get some basing in here, then you've got an opportunity to go long. On a pullback, you've got an area here around 3,500 at this wick over wick above that pivot low. That wick over wick above the pivot low, obviously your stop has to go below the pivot, so you've got a little bit more width there in terms of your stop. I chose this one because it's a little bit lower and closer to the pivot than the one above it. Now, the one above it could hold very well also, being especially that it is a gap fill level. But I think that the area below, probably a bit better. Now, we were looking at our big picture uptrend is kind of still continuing. This would just be a pullback to kind of jumping right back onto that trend line. We have essentially a rising trend line here. And I'm not a huge trend line user, but a pullback into this region would put us pretty close to that rising trend line and an opportunity to get long. So that's a level I think that makes sense for today. In the NASDAQ, we had taken a look at this 15-minute level right here last night, and the 15-minute level was this little bit of basing here before a move up. Now, this came from the Sunday open, and that was selected primarily because we had a lot of resistance over here in the past. Now, I like the level, but unfortunately, we're basing in front of the level, and basing in front of the level makes it that much weaker. So a little bit of basing here in front of the zone might scare you off of taking this position. I know for me, it definitely keeps me a little bit out of that trade because of all that basing. When you think about the basing, what does the basing do? It minimizes my reward to risk ratio. And so with that minimization of the reward to risk ratio, I'm not as interested in that position. I will still be interested in a long, but we're going to have to get above this basing that we're hitting in. So you might even start to say, well, what about a breakout above some of these areas? And I think that would be a better play than just taking the reversal at this point. And then as far as levels down below, quality demand, I don't see any phenomenal levels down below. And we had spoken last night in the live trade room about the possibility that we would see basing here, and that actually could become a little bit of a breakdown opportunity for price to trade down a little bit from this region. Looking at the Russell. So the Russell, we didn't get any basing in front of our potential breakout to the upside level. Just gave us a little poke above without the basing. So it's still a valid area for a breakout if we get basing in front of that region. So I'm going to leave it there. And then on the hourly chart, I actually like this level better than the other ones on a pullback. Nice rally-based rally above a pivot low. In the Dow Jones, we looked at the Dow last night. In the Dow, similar to what we just talked about in the NASDAQ, there is this basing here before the level. So a little bit of basing in front of the level. Now, if you wanted to take that anyway, you've got a little bit of movement. Let me remove these drawings here. You've had a little bit of movement off of that zone. And your risk in this case, though, if you think about what your risk has to do, the tightest that you could place your stop in this scenario would be here. Right? Which technically this wouldn't even be the best. Well, I guess technically if you look at the 15-minute chart, this actually becomes its own pivot. So theoretically, you could place your stop just below the zone. So in that case, your risk, it would be about this distance. Realistically, it's probably better to go to about here. So you're looking at risk of about that distance. Well, on the 1-hour chart, we can see that we have basing right in here. So if I just duplicate that drawing and move it up to here, we can see that my basing is just about exactly a 1-to-1 reward to risk. By the way, not saying you cannot take 1-to-1 reward to risk trades. Just know that when you take a 1-to-1 reward to risk trade, you've got to have better than a 50% winning percentage, and that makes your trading a little bit more selective in what it is that you take. Quality level on a gap fill zone, so I'm not against it if you've taken it. I would say, however, once you get to about 28,691, you take your stop, you move it to break even, or you take some money off the table. All right, let's go over to our commodity markets. Commodity markets, we look at crude and we look at gold. Those are the two markets that we take a look at in commodities. In crude, we had looked last night about an iron condor trade, the 45 by the 41 for 12-day expiration, knowing though that 45 is a little bit more hairy, because it does look like if we break out, we would break out to the upside. And so I'm going to put a little bit of a line there for potential basing. Obviously, that's not a good setup as of yet. I would still need more touches and some basing in front of the level, but it is still a setup nonetheless. On the hourly time period, we do have a little bit of a rally up off of this zone right here that could act as a bit of a pullback. That occurred in the overnight. So I will put a bit of a level around here. Stop obviously just below that pivot. And then that is a 15-minute mark, so it's a purple line. All right, in gold. So gold, we looked at a little level in gold last night, and very similar to the other two markets that we've spoken about. In the overnight, you had this little bit of basing here, right, in front of gold. We did get a touch and then a move away right back to the basing, which was about a 1-to-1 reward to risk. And so this is part of the reason why I'm not a huge set it and forget it trading fan. Pop this back up so you can see the time of the day, because we hit that level at about midnight Central Time and then moved away. So if you were up and awake, then certainly that 1-to-1, if you wanted to take it, great, just like the Dow Jones we just talked about. If you're not awake and you just do a set it and forget it, then what happens is you wind up getting stopped out, but you probably wouldn't have taken the trade anyway based upon the fact that there was 1-to-1 basing, right? And so that's part of the reason why, yeah, the trade worked for a 1-to-1, but it also told us you probably shouldn't get in due to the basing. Remember, you will hear me say this time and time again. The kiss of death is basing before a level. The kiss of death is basing before a level. And I'm still overall net bullish on where I think gold is going to go, especially on our 4-hour chart where we see higher swing highs and higher swing lows. I thought that was a pretty decent area to get in. Turned out we came a bit below it and then rallied up higher. But we did get more price rejection at this line, and I'm going to start the line all the way back here so you can see we got price rejection here, price rejection here. So, and when I say price rejection, I'm talking specifically to the wicks that came to it, which is support, 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 and then strong price rejection here. We came really close to that exact number in the overnight. So actually now that sets up for a better breakout to the upside. All right, let's see, taking a look at our bonds and currency markets. So looking at our bonds and currencies, and I did get some good feedback on somebody said that sometimes I go through the bonds and currencies pretty quickly at the end, and almost like I don't want to do them. That's not the case. I apologize for that. Sometimes I spend too much time on a couple of markets, and I really do my best to keep these videos under 15 minutes. So I'm going to try to do better about not rushing through them. So, by the way, those of you that leave comments, I appreciate the comments. They definitely make me think about what we do here. So please continue to leave comments as you see that there's some value. I do see there's some value to them. So thanks for that. Looking at this one now on the 10-year note, we had a little bit of basing in here. We were looking for a little bit of basing for a breakdown. We didn't get the official basing that I would normally look for. And now we started to kind of pop back up. You might actually get a reversal off of this pivot area up here. Since we didn't get the basing, you go back to the origin of the move that caused price to break down through that level, and I think you may see a decent reversal. We did also look last night at the 30-year note, and I don't normally look at the 30-year, but I think that the 30-year is actually probably a better setup for a short. When I look at the 4-hour, it's a much stronger downtrend. I think with a better chance of price continuing to fall. In the Aussie, so the Aussie, we've continued to rally higher. We had a bunch of supply levels above us. We just removed them because the levels are so old that I don't believe that there's going to be a whole lot of orders left from when that area was created. It's one thing for stocks. It's another thing to have levels still there from futures contracts that expire, right? And so I didn't leave those levels on the chart. They still may be valid up above me, but they would be in the context of a bigger picture upward trend anyway, and so they'd all have to be confirmation trades. So I just removed some of the supply levels that I had up above me. And now I'm looking to a couple of areas of demand down below. Now I will say that our momentum on this one, if I pull up my momentum indicator, I can tell that I'm getting a little bit of waning momentum on the hourly time period, although waning momentum isn't ever going to tell me that the markets are going to drop, right? But it might be enough to pull us back to here for an area to go long, right? I mean, we had waning momentum here as well, if I take a look back. So the slowing of momentum doesn't necessarily mean anything's going to happen, but what it did was it gave us a pullback and an opportunity to get long on the next rally back up. So that's what I'm looking at here as far as my levels. 7316 by 7304, I think, is your first closest and best demand area. In the euro, looking at the euro, we had a really nice trade on Friday from our euro position. So if you caught that Friday trade in the euro, hopefully that was able you were able to pull a little bit of coin out of that move. And that Friday trade in the euro was off of this level right here as we hit it and got a little bit of a move away. We would now be looking for basing in here because I think you can get a nice little move down. We are coming to an area that could be considered supply, but I don't love the fact that we've bounced off of it once and moved away and we're into it a second time. And so I think demand is going to be the better play on a pullback if we get a quality enough pullback to a decent area. The problem is I don't have any super decent areas, right? Last night we came off of this zone here last night in the overnights, but that zone to me was a bit of a retest of some of these areas, and so I wouldn't have jumped in on that thing anyway based upon my risk tolerance and my style. I feel like I'd rather be a lot more cautious. And those of you guys that watch every day, you know that I am a lot more cautious. I'm not going to force a trade just because I think I need to take one. And the euro's telling me right now that if I go out and find something, I'm going to be forcing it. Canadian dollar. So the Canadian dollar actually looked to be a bit weaker than some of our other markets last night, or some of our other currencies. And we are much lower than the most recent high. On here, we can see that on our 4-hour, we're still in a pretty good upward trend. But the fact that we were unable to create a new high after breaking a Friday demand zone told me, okay, we may see a bit of a rollover. We didn't get much of a rollover in that move, and so in looking at it, technically you could theoretically get long above the Globex high if you really wanted to, but we don't have the basing in order to justify that. And when you go to the 15-minute, you've got a little bit of basing here that's actually fairly recent, right around the European market, the London market open. That may be an opportunity to get long on a small pullback. But once again, just like the euro, I feel like I'd be forcing it. I feel like I'd be forcing a trade if I wanted to take that. And I'm just not into that. I'm not into doing that. I'm not going to force a trade if one is not if it's not there, that it says, hey, there's a good level. I'm not going to jump in. Now, can I go to a 5-minute chart and look and get lower? And that's what a lot of people do, is they say, well, if you don't find anything on the 15, go to the 5. If you don't find anything on the 5, go to the 2. Well, where does it end, right? For me, it ends at the 15. I don't go lower than a 15-minute chart. And I can't tell you how many times I've seen traders that are not getting the results they want, and the biggest reason is because they're using too small time frame of a chart. You're going to be better when you stick to bigger time period charts. So still have an upward trend here in the Canadian dollar. That trend is going to continue to go. I'm just not going to look to force a trade to get in. This little wick over wick here is pretty close, but I have a lot of recency bias in that we just gave it a little move away and not a strong move away on that wick over wick. All right, that's a lot of words for me to say. I'm not taking any of those levels. Great British Pound. We looked at this wick over wick last night. Now this wick over wick did have a very nice strong move away, and price came right close to it in the overnight. I mean, like super close, and didn't get filled, which is super annoying, by the way. And so now in looking at it, I'm going to take this level and I'm going to move it to a 15-minute version of itself. Since we came so close, and move it just to the pivot on the 15-minute chart. I think that's probably the best thing to do. Now, looking at the 1 hour, if we come back up through here, we could get some basing up in here to give this a breakout. That wick that poked above there, in play, but not overly concerning to me, especially the fact that it was a Globex session. If we get basing here, you could see price continue to run up. Japanese yen. So in the Japanese yen, we'd had a demand level right here, and we pulled it off last night. We had this area right here listed. But I said that with all the volatility we're seeing in the yen, I'm going to need some really strong areas of demand to stop it, and I didn't feel like that was quality enough. So I'm going to come a bit higher now to look up to this area here as potential supply, because that could be a pretty strong area and a nice reversal. That time of the day, pretty good time of day. For some reason, my time of day axis keeps disappearing unless I do that with my chart. Right around the European market open, we saw that strong move away, and so that level, I think, is going to be where we look for our next area of reversal. So those are our 12 markets for today. As always, if you've got questions, please send us an email, support@tradersarmy.com. Remember, Wednesday morning, live session. Do not miss that out. Hopefully you will get a ton out of it if you decide to join us. If you guys have any questions, once again, let us know. Until tomorrow, buddy, I'll talk to you soon. See ya.